Welcome to the Commercial Property Insider Show, a podcast dedicated to commercial property and business owners. Gain actionable insight from industry leaders on the current trends in commercial real estate and common challenges faced by owners just like you.
Welcome back to another episode of the Commercial Property Insider. I'm your host, Julie Chu, and today we have an exciting guest, Sara O'Callaghan, CEO and founder of High Five Capital Solutions. So Sara is a funding advisor expert for small and medium-sized business owners across Canada and the US, providing business access, the capital and equipment that they need to expand, innovate, and succeed. Well, thanks so much, Sara, for being on the show.
Thanks for the wonderful introduction, Julie. I look forward to being here and sharing some insight with your listeners.
I love your story because it is so unique on how you get into this very niche area. So can you give us your background and how did you get started in this field?
Absolutely. So early on as a child, I had an interest in business and always thought that I'd become an entrepreneur. My parents were just always telling me that I seemed well suited for a career in business. I was a natural born leader, genuine, inquisitive, and very ambitious. So after my high school graduation, I took their advice and applied for the business program at UBC Okanagan, my local university here in Kelowna, BC. Once I completed that degree, I chose to travel and explore a few different career paths. I wasn't quite sure what was going to be the best use of my skills, and I really wanted to find something that interests me for the long term. When I became an automotive finance manager, that's when everything really started to click for me. I realized that what I loved about each career, despite their many differences, was the aspect of helping individuals and business owners to secure funding. So then, of course, COVID hit, which we all remember that, quite memorable. And that caused me to rethink my career in automotive finance. My husband was also employed in the same industry. So I have 3 stepchildren. There was a lot of uncertainty about what was happening with schooling, and that caused some confusion. So we just decided, you know what, one of us needs to make a career change here. We can't both be working these long hours and working Saturdays when there's kids at home now. I decided to take a course in alternative lending. I had heard about it and knew that it was still in its infancy in Canada, but had been in the States for quite a long time. And I just decided to explore the different services available to business owners. Once I completed that course, I went right to it, registered High Five Capital Solutions, and began forming lender connections throughout Canada and the States so that I could better serve my clients. And I can say, hands down, that was the best decision I've ever made. Helping businesses discover new ways to optimize their cash flow, manage their working capital, meet payroll, or hit that next business milestone is truly rewarding. And that's why I do what I do.
And I have a very similar story. I love helping some of these small to medium-sized business owners because you see the results of your work.
There's nothing better.
You work with manufacturing and mechanical industrial clients. This type of clientele is a specialized area. So what kind of challenges do you see consistently among this group?
By working with these industries, I've noticed that there's a couple things that really stick out. There's a high capital requirement. This is especially true if you're a startup or a small business within one of those industries. Just the equipment, the machinery, and technology alone within those industries can put a real strain on the financial resources. Also, their product development. So kind of ties hand in hand because the research and development process can be very costly and time consuming. It's an ongoing expense, especially when they're continually innovating in today's competitive landscape.
Just getting the foot in the door and getting everything that you need is so capital intensive to help alleviate that stress and then help them grow.
So there's opportunities and ways for them to reduce their operating expenses and production costs. One example might be something like third-party PO fulfillment, which can reduce the cost for producing and transporting goods to the buyer. It allows the business to fulfill those orders without the initial cash constraints to purchase the materials and pay their suppliers. It will expedite that production process, taking the stress off of their financial resources, and still aids in customer retention by adhering to reasonable production timelines.
And a financing type like this is very specialized and unique. And so when someone comes to you, how does that look when they first approach you? How do you know what's the best fit for the type of financing that they need?
Typically, it's just going to be a free consultation initially, just for me to better understand where they're at now, where they're heading, the bottlenecks or the areas that they're struggling with. that are holding up their production or the things that are the major strains on their financial resources.
Ultimately, problem solving, where does it hurt the most? And let's put our time and attention towards that. The banks look very closely at someone's credit worthiness, their financial statements. Was there any advice that you can give to some business owners when they're looking to get those loans? How do they paint the best chances of success on their loan application? Any advice?
Whether you're going to visit a bank or coming to a alternative lender, someone like myself, having a comprehensive business plan that outlines your business's goals, strategies, and your financial projections or your pro forma financials, it's going to demonstrate your commitment and ability to repay the loan. Depending on the structure of your business, they'll likely look at your personal and your business credit. So ensuring that you're paying your bills on time, managing your debts, and maintaining good debt service or debt to income ratios. These factors are all going to ensure that you're keeping that credit score in a favorable range when it does come time to secure additional credit. So you need to be able to articulate the use of funds to that lender. And I can guarantee you that they are going to be asking this on the application as well as on the loan interview. They want to know your ability to communicate how the funds are going to benefit your business, whether it's for the use of a business expansion. Maybe you're looking to add a new franchise location, a business merger or acquisition, acquiring new equipment, or just acquiring new talent. Those are just a few examples of the use of funds.
Many of those things are so capital intensive. I'm going through that with my own business. I'm sure you've seen where people are like, oh, I'm not sure, or they give like a soft answer. I'm sure that doesn't help anyone in their process.
Absolutely. And there's probably one more thing we could even touch on with that regard is your cash flow management. So being able to demonstrate to the lender that you have good cash flow management, you have the ability to pay your current operating expenses and then the ability to cover any additional loan payments through that cash flow. Okay. If you're already having issues with cash flow, it's probably going to be best for you to look into an ongoing cash flow solution, such as invoice factoring or PO financing to improve the cash flow prior to going in and applying for the loans. Your chance will be much better.
So you covered a lot of what they can do to improve their chances of success. What have you seen where people, they make these mistakes and it just like kiboshes everything? Do you have any insight on that?
If you fumble it enough times, it's worth just taking a step back and looking at what you've done wrong or consulting a professional, because rather than going and applying somewhere else again, it's just going to end up with the same result.
Was there anything else that you want to add to that?
I'll just touch on a couple that I've encountered recently. An incomplete or an unsigned credit or loan application. Just try and take care when you're completing these applications. Don't rush through the process. This is often when over-exaggerated revenues or other mistakes. And just rushing the process will mean that you likely will have to start it all over again. So try and complete it honestly and accurately the first time through, just to prevent any unnecessary delays in processing your application. Also, if you're looking to secure an asset-backed loan, then ensure that you have sufficient collateral, because if the collateral isn't sufficient and it's not more than the value of the loan, the lender will likely just either flat out reject it or request additional collateral. These are a couple things that can hold you up. And one more, actually, this is a big one. Unpaid CRA debts. Unpaid debts to Canada Revenue Agency. From my experience, whether it's a financial institution or if it's a private lender, they will not extend a credit offer if there's a large sum owing, unless that use of funds is going to be to pay down the existing CRA debt.
I find that interesting. I'm surprised that even some lenders wouldn't just cross you off the list then.
Yeah, as far as I've done it with some alternative lenders, there is an opportunity there, but the use of funds has to be to pay down that debt.
Was there any specific strategies, techniques that you can help suggest for small business owners when they're presenting their ultimate case?
Bring the pertinent or requested documents. Being prepared is definitely going to expedite the process for the application. The longer it takes, if you're not prepared when you come to that interview, it's just going to take longer for a decision from the underwriters. And basically that application can't be submitted till the file is complete. Only then will it be submitted for the initial audit.
And then typically there's like a checklist or a format where people can actually know ahead of time.
Just make sure that you're diligent and you're bringing that required paperwork with you.
Interest rates. So that is the talk of the town nowadays. So what are your clients doing to manage some of these interest rate increases? How is it changing the environment that you are operating in? How do you overcome this interest rate hurdle?
I'd say just maintaining good personal and business credit to ensure that you're qualifying for lower interest rates. Of course, low interest rates are going to equate to less interest paid by the business over the term of the loan in comparison to a high interest rate. The higher the interest and the same term, you're going to be paying more. It's a higher cost of capital. So just maintaining good personal and business credit will help you qualify for those lower interest rates. Try and confirm the accuracy of your credit report and be diligent about looking at that, I'd say every couple months. Just make sure that there's no errors there and be sure to dispute any discrepancies or register for a credit repair program if your credit score needs a little improvement.
Okay. This is very practical advice for people. Was there anything else, any other questions that you want to share with our listeners today that I didn't cover?
For any time you're taking on a new credit facility or you're looking to take on an additional loan, just make sure that the numbers make sense for your business. So make sure that the repayment term, the payment frequency, and the payment itself align with your revenues and your goals, where you see your business going. If you're looking to secure a new credit facility for expansion and consider the opportunity cost. If it's a $100,000 credit facility, but that will help you employ additional staff, reduce your operating costs, break into a new market with a return on that investment, then I'd say that makes sense to move forward. But it's worth consulting your CFO, a business consultant, advisory firm, and or a broker like myself to discuss the different paths to funding available to you, as some are going to be more cost effective and provide more immediate working capital solutions than others.
So you're saying when they're doing their financial projection, make sure that the financials make sense. And in addition to that, have a second set of eyes, making sure that everything makes sense with these ratios and debt service covers ratios. So
absolutely. It doesn't hurt to have a second set of eyes and enlist the help of a professional if you're not well versed in making these types of decisions.
That's a really great segue. How do people get a hold of you, Sarah?
So you can reach me at sarah@highfivecapitalsolutions.com. And also through my website.
Well, this has been wonderful. And thank you for sharing some information with us today. And that was it. That's all for today's Commercial Property Insider. And thank you so much.
Amazing. Thanks for the opportunity.